we are covering business income and extra expense for the property and casualty license exam. This coverage is triggered by a direct physical loss from a covered peril that causes a necessary suspension of your business operations. Think of it this way: if a fire damages your building, your commercial property policy pays to repair the building. But who pays for the income you lose while you're closed for repairs? That's the job of business income coverage. It's designed to replace the net income you would have earned, and it also covers continuing normal operating expenses like rent, insurance, and salaries for key employees. Now, let's distinguish this from extra expense coverage. Extra expense is for the money you spend above and beyond your normal costs to avoid or minimize the shutdown. For example, imagine a fire guts the kitchen of a popular restaurant. The business income coverage would pay for the lost profits and the monthly lease payment while repairs are underway. The extra expense coverage would pay to rent a food truck and set it up in the parking lot to keep serving customers. This extra cost helps the restaurant retain its customer base and reduces the total business income loss, which the insurer likes. A critical concept the exam will test you on is the period of restoration. This is the time frame during which business income and extra expense losses are covered. It doesn't start the moment the loss occurs. There's typically a waiting period, often 72 hours, which acts like a time deductible. The period ends on the date the property should be repaired with reasonable speed, or the date the business resumes operations at a new, permanent location. The key exam trap here is the word should. If the business owner delays repairs for a month to go on vacation, the policy won't pay for that extra month of lost income. Let's consider a retail store scenario. A water pipe bursts, flooding the entire store and forcing it to close. The direct physical loss is the water damage. This triggers the coverage. The policy will pay for the store's lost net income during the closure. It will also cover continuing expenses like the manager's salary and property taxes. If the store owner decides to rent a small kiosk in the local mall to continue selling some merchandise, the cost of renting that kiosk would be covered under extra expense. For a warehouse, if a tornado damages the roof, forcing a shutdown of distribution, business income pays for the lost earnings from being unable to ship orders. If they pay extra to expedite the delivery of steel for the roof repairs, that would be an extra expense aimed at shortening the period of restoration. A common exam question will ask about payroll. Generally, the policy will cover payroll for all employees, but coverage for ordinary payroll, meaning non-essential employees, might be limited to a specific period, like 60 days, unless a higher limit is purchased. This is to encourage the business to make a decision about staff rather than paying them indefinitely. Here's a mental shortcut to keep it straight. BI keeps you in business. EE gets you back in business. Business income replaces your lost revenue stream, and extra expense pays for the proactive measures you take to get that revenue stream flowing again sooner. Watch out for questions that try to trick you by presenting a loss scenario where there is no direct physical damage to the insured's property, such as a power outage in the neighborhood. Without that direct physical loss trigger, there is no coverage. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.